What's up, everyone? In this video, we're going to be taking a deep dive into DraftKings earnings report. So DraftKings has actually been on a tear over the past couple weeks. From the start of 2023 till now, the stock is almost up 100%. So it almost doubled, and it's running with quite a bit of momentum from their latest earnings release. And I'll tell you, DraftKings had some pretty impressive numbers that we're going to talk about, but we're also going to give an unbiased, or try to give an unbiased approach into some of the risk factors with DraftKings as well. But overall, we have a lot of exciting things to talk about with this company. So first things first, DraftKings is crushing it in terms of revenue growth. Like, we're in a market right now where whether you look at big companies like Apple or Meta or Amazon or even some of the growth stocks, like, it has been a tough market, right? For multiple different reasons. Not only just for the bottom line with profit and earnings, but also with just increasing the top line with revenue. Like I said, whether it be big powerhouse companies or even some of these smaller growth stocks, but DraftKings is just really setting the tone when it comes to top line growth. DraftKings revenue is up 81% year over year for this quarter, so that is insane. On top of that, their revenue for the whole year is up 73% year over year, obviously, which is awesome to see. And it's like, when you hear a company that has an 81% revenue growth just over 1 year, like, that is insane. Like no other companies are doing that. So that's awesome to see. What was also good is that they beat on the top and bottom line for this most recent earnings, and it's part of the reason why the stock popped up. They also increased guidance slightly, which is awesome to see. And there's a couple other notable things that I want to talk about. So one other thing is that let me go down really quickly. So basically what we're seeing now is a lot of people are, they might look at DraftKings and say, you know what? Yeah, of course their revenue is going to be growing a lot, considering that they're, entering in a lot of other states, and they're adding more and more states to, be eligible to accept bets in, right? And that's just not the reason why DraftKings revenue is growing the way it is. Like, yes, adding more states absolutely helps grow revenue. That is awesome, and yes, it's obvious that definitely plays a role, but it's not the only reason DraftKings is seeing the revenue growth that they are. Basically, we can see on DraftKings earnings presentation for the states that they started with in 2018 to 2019. So basically, New Jersey, West Virginia, Indiana, Pennsylvania, and New Hampshire, basically their year-over-year revenue growth for those states are even up 50%, which is definitely worth noting. So, like, it would be a completely different story, if we saw DraftKings seeing 80% revenue increases just because they're adding new states, but that's not the case. They're actually growing their revenue in a very, very significant way just from the states that they've had for years now. So that's definitely worth noting. On top of that, not only are they basically seeing, I guess you could say, revenue growth from states that they've already been in, but we're also just seeing tremendous amount of, I guess you could say, engagement across the platform. So one of the key performance indicators that DraftKings uses to measure how their business is doing is MUPs, so monthly unique payers. And essentially, in the 3 months ended December 31st for the 2021 year, there were 2 million MUPs, right? Basically, 2 million people who have a paid engagement in the DraftKings network, right? As of the latest reading, that number is up to 2.6 million MUPs. That's awesome. So not only are we seeing great MUP growth of, you could say, around 31%, but we're also seeing the revenue, the average revenue per MUP, up a significant amount, around 42% to be exact. From the rounded numbers, we could see the average revenue per MUP in 2021 was around $77 for the 3 months ended December 31st, and then the most recent reading is at $109. So the main thing you need to know is that not only is DraftKings, having more people pay them on a monthly basis, make a paid engagement on a monthly basis, but the revenue per MUP is skyrocketing. And I think that's very notable because we're not necessarily in an easy economic environment. It's not like we're having the free money printer just go on and on and on like we had in 2020 and 2021. we're actually in some pretty hard economic times right now, and the consumer doesn't necessarily have a ton of extra spending power, but we're still seeing very significant increases of the amount of people on DraftKings, but also the amount of money that is being generated from those clients. So that's definitely worth noting. Now, DraftKings, one of the biggest problems with them is that, as a lot of growth stocks are similar to this, they are not profitable yet, right? Most growth stocks take years before they're profitable, and then, it's off to the races from there. DraftKings is not profitable yet, and they expect to have a positive adjusted EBITDA for the fiscal year of 2024, so that's awesome to see. They've also been focused a ton on efficiency over the past couple quarters, trying to cut those unnecessary costs. They had some layoffs like a month ago or so, like many other companies have. Like basically any company you look at in the market right now, whether it's Amazon, Meta, Google, you name it, they're probably doing layoffs right now, and DraftKings is no different. So that should help on the bottom line. They also, in terms of just DraftKings stock, have had a couple upgrades recently, which is awesome to see. And the future still remains very bright. For those of you who know, I've been a pretty big fan of DraftKings for some time now, and that has not changed. The stock has been very volatile over the past couple of years, like a lot of growth stocks have been. But the key thing going forward will be to become profitable, continue to be very efficient with the costs, and to not, get too crazy with, I guess you could say, the marketing spend. What's worth noting is while DraftKings is having just absolutely insane revenue increases, there's still a lot more opportunity left on the table. We can see right now, here's the map of where DraftKings is legal and live at. What's definitely worth noting is right now, DraftKings mobile sports betting is live in 20 states, and that represents 42% of the U.S. population. There's also iGaming that's live in 5 states, and that represents 11% of the U.S. population. And they're also live in Ontario, Canada, with iGaming and the sportsbook, and that represents 40% of Canada's population. So it's like we're seeing this awesome revenue growth across the board, but we still have a ton more room for even more growth, if that makes sense. Like DraftKings is only live with and available to only 42% of the U.S. population. So that's really nothing, and there's still a lot more room to grow, not only into other states, but as the industry gets bigger and bigger and bigger, you will see more of the population just placing bets overall. So very interesting in that sense. If we go over to the dashboard, we could see that DraftKings revenue is increasing basically quicker than any other companies out there. And while that's awesome to see, like I hinted on a couple minutes ago, the main thing will be, to eventually getting to that path of profitability. That will be huge. And like I said, they expect to have positive adjusted EBITDA for 2024. So that's good. DraftKings is in a booming industry, and gambling's not going away anytime soon, especially mobile gambling. And all of their other, iGaming products and all that good stuff. They, like I said, they still have work to do. And what's interesting is that they are set to go live in Massachusetts for March. So that's awesome to see. That should definitely help increase that top line even more. Looking at DraftKings stock, they've been booming up a ton over like the past couple of weeks, especially from 2023 to the time in this recording, which is on February 21st. The stock is up almost double from the start of the year, which is awesome to see. For me, going forward with this stock, I'm just going to keep dollar cost averaging into it. I'm going to keep buying more and more and more over time. And I think in a couple years from now, it'll be looking pretty good. If we go to, let's say, a weekly chart, we can see the stock has been all over the place, right? But at the end of the day, if you liked DraftKings at, let's say when it was at $60 a share back in 2021, odds are you'll probably love it when it's at $12 a share or $15 a share or $20 a share. So I think the key thing with this stock is understanding that it's a growth stock. It's going to have some wild swings to the upside and the downside in the future. But I think the biggest thing is, like, if you decide you like the stock for the long term and you're willing to take the risk on it, I feel like the best way to go is just to dollar cost average over time. This stock has highs of around like $75 a share that it made in March of 2021. So right now it's at 20. You know, it's significantly off from its highs, and I do think at some point in the future we will eventually retest those highs. But at the same time, I think it'll take time, and it'll be a volatile path to get to that point. So I'm just going to keep averaging into this stock. I think it has a lot of potential going forward for many reasons out there, and I love to see how they're just crushing that revenue growth. And I'm so excited to see what this company looks like, you know, in 2, 5, and 10 years from now, because I think there's a ton of opportunity for growth, but at the same time, they do have some key things that they do need to take care of, like getting to a profitable state, right? That'll be huge. Also, what's worth noting is if we do look at DraftKings, some of the fundamentals, like I said, the revenue is booming quite a bit. Right now, they're sitting at a price to sales ratio of 2.8, which, you know, not bad. Like, really, it's really not bad. You know, even if we look at some of the other companies, like, I know this is not a fair comparison at all, but I'm just going to throw it out there anyways. Like, Apple's trading at a price to sales ratio of 6. You know, you could look at maybe a company like Meta that's trading at a price to sales ratio of 4. You could look at maybe Zoom with a price to sales ratio of 5. And then DraftKings out here is sitting at a price to sales ratio of 2.73. And they arguably have some of the biggest revenue growth potential out of all of those other stocks, but at the same time, they do have a bigger risk of not becoming profitable. So overall, I'm very excited for DraftKings going forward. If you guys want to analyze any company and calculate your own price targets, definitely make sure to check out that first link in the description in the comments down below. You can calculate your own price targets through the 5 different calculators we offer. You can see all analyst upgrades and downgrades in price targets for any stock out there. You can see what the smart money is trading, basically what insiders and members of Congress are trading. You could also get access to basically every fundamental metric you can possibly imagine with the dashboard. In worst case scenario, you can cancel at any time, but if you're looking to invest in stocks for the long term, this dashboard is definitely the way to go. Like I said, you can even calculate your own price target. So definitely check it out. It's that first link in the description and the comments down below. Besides that, I'm very excited for DraftKings stock over the next couple years. I think it'll be a good one. So let me know your guys' thoughts in the comments down below. Besides that, let's have an amazing week.